Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The dollar index experienced a slight retreat last week, reversing its upward trend for 2 consecutive weeks, further declining from the year's high near 106.51 recorded at the beginning of the month. The USD's performance last week reflects investors changing bets on when the Fed might initiate a loosening cycle. Additionally, according to the CME's Fed Watch tool, the probability of the Fed launching a loosening cycle in September has significantly decreased to around 45%. The USD's performance last week also corresponds to stable yields across different maturities, while the macro environment suggests a reduction in rate cuts for the remainder of the year. After investors took profits following months of gains in gold, the price of gold is poised for its first decline in 6 weeks. Despite easing expectations from the Federal Reserve gradually diminishing, gold has risen approximately 17% since its mid-February low. This shift has boosted the dollar and treasury bonds, which traditionally act as a drag on gold prices. Gold's strong performance is attributed to central bank purchases, heightened interest in some Asian markets including China, and the potential for investors seeking protection against inflation. Currently, gold is undergoing a belated, relatively aggressive, but healthy correction. The WTI crude oil price was supported by tensions in the Middle East last week. Prices closed 1.68% higher at $83.30 per barrel, but the strong dollar and U.S. inflation data dampened hopes for a swift rate cut by the Fed, thereby limiting inflation growth. The geopolitical crisis is ongoing, with proxy conflicts unresolved, which will continue to provide support and help alleviate pressure from sanctions imposed by data. On the other hand, Janet Yellen stated last week that the U.S. may be stronger than levels indicated by the relatively weak quarterly data. Yellen's comments were remarkably similar to the surprising increase in inflation data released on Friday.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news